Did the Austin real estate market bottom? Are we at the end of the tunnel in terms of the housing recession, or is the storm just brewing? In this video, I'm going to go over the exclusive data that I have from the Austin Board of Realtors MLS and help you answer all of these questions. Just this week, the Austin Board of Realtors finally released the latest market data for October 2023. So let's go over the data together right now. So as we can see right here, in October 2023, the Austin Round Rock MSA metropolitan area had a median sales price of their homes in $435,000, which is down about 7% month over month. And if you have been tracking the data for a long time, you'll see that this price is actually something to be happy about because we're stabilizing around the 440, 435-ish area for quite a bit now. The number closed out hover around 2,337. This is a pretty expected number because the Federal Reserve raised interest rate to one of the highest in decades. That's exactly what the Federal Reserve wants, which is to make sure that the home prices don't go overboard and cause high inflation in the economy. But this next data is something that I'm looking more carefully, more worried about, and that is this average days on the market, which is up 21 days, heading into the 68 days. And as I mentioned, this is as the Federal Reserve intended. They want to have high interest rate and therefore a higher mortgage rate, causing the number of homes stay on the market for longer. And they're doing a great job at that. And this is one of the key ways to stop inflation, stopping transactions and putting it to a halt. We can look at this number, which is the month of inventory, hitting around 4 months of inventory homes. In theory, this is still considered a seller's market. However, due to the high interest rate, as we mentioned before, is now shifted towards much more of a buyer's market. Speaking of inventory, this is the exclusive data, or one of the exclusive data that I pulled from the Austin Board of Realtors MLS. Here is exactly the number of active listing versus sold listing here for the past 5 years. You can see the green line right here. This is the number of active listing. What really surprised me when I look into the data here in detail is that in January 2022, the number of inventory spiked from below 4,000 to more than 13,000 in the span of half a year. And of course we know why, because during this period where we had extremely low inventory, homes were selling like hotcakes and people were overbidding on prices. And people were overbidding for homes, and deservedly so, because they had such a low mortgage rate. Their monthly payment is still very, very low. So home prices were gotten out of hand. And now everybody saw it. They start prepping their homes. And then guess what? A year later, they start trying to get into the market. But by this time, the Federal Reserve already hiked rate, and a hiked rate at historical pace, and that's why a lot of homes are sitting right now. And now heading into January 2023, I can see there is a drop in inventory, mostly because some people pull out of the market, not wanting to sell anymore, because if they do sell, the high interest rate environment makes their mortgage payment high for other areas as well, so they're still kind of sitting on the sideline. Now inventory is back up, but at this page, we're at one of the highest interest rate in modern history. Well, in the past decade or so. So now let's look at the sales number. So this is something that I really think is important in this detailed data, which is that even though in this high interest rate environment, we did not really see a huge drop other than the cyclical drop of number of homes sold in the Austin area. You can see that we have very cyclical approach here coming in, but even in this high interest rate environment hovering, this is January 2023, mortgage rate probably hovering around 6%, 7% already. And one thing I do want to mention here is that this inventory spike not only comes from existing home, meaning resale home, it also comes from new build inventory homes. Things the builders borrow money. They saw Austin as an area where people are moving into, and they saw after the opportunities and bought land and started building homes here. And right now, the home builders are suffering because they borrow money at high interest rate construction loan, and they have a settlement date, which if they don't sell the home will have an even higher interest rate from the bank. and they'll lose money. They might even take a loss on it. And at the same time, they're competing with resale home and other home builders in the area. And so what they're doing right now is they're willing to throw incentives like rate buy down, covering closing costs and builder credit, just so people can buy their homes as soon as possible. And I talk about this all the time on this channel, that I really think an inventory home is one of the best opportunities to get into the housing market right now. So I do want to say, if you're looking to buy a home here in Austin, I am a real estate agent here in Austin, Texas, and I want to help you buy your next home here in Austin. So give me a call, text me, email me using the information in the description box below. And I look forward to working with you and helping you get into your next home. And let's get back to the market update. Next set of data I want to show you is the list price versus close price chart. You can see during this past 10 years or past 5 years or so, you can see during the COVID spike where interest rates were low, home prices went overboard. You can see there is a huge spike in close price in this period between mid to late 2021. So home prices start closing below the listing price. And here's what happened. Slowly, you can see we're trending downwards. The gap widens quite a bit in around March, April time of 2023, probably hovering around $60,000, $70,000, or sometimes maybe even $100,000 differences right here. So typically what we want to see is to see the gap to be pretty small. That indicates that the sellers are pricing the property correctly and the buyers are willing to pay at asking price. When we have a wide gap like this, just indicates that there is a discrepancy in how people are valuing their properties. And to be honest, it's no one's fault in this case, because sellers who are on the market today, they are still thinking about the most recent bias, which was 2021, 2020, early 2022, when interest rates were low. The home prices saw exponential, astronomical level, and it was just basically only a year or so prior, and real estate prices usually move slowly, and that's why we have this discrepancy. And now you might ask, then if the sellers are being unreasonable about their expectations, why would we expect them to change their thoughts? Well, this next data will show you exactly why, and that is the active listing versus expired listing. So let me give you a little background of how listing works. Typically, real estate agents sign like a 1-year listing agreement to help a seller to agree upon the length of time they will list their home. That usually is 1 year. If within a year after, let's say, price reductions and the home still sits on the market, that listing agreement usually terminates. Typically, after a year of sitting on the market and the home not moving, after countless price reductions, that is when homeowners will actually get a more realistic picture about the market, where the environment of home prices need to come down in order to meet market demand. And I really think that we're reaching a market equilibrium very, very soon, if we were not already there. So if you want to understand why, be sure to keep watching. I'll go over that later in this video using a very exclusive data set. So right now, right here, you can see what happens here is that there's typically a spike in expired listing around the December of the year. So in this case, you can see December 2022, we saw a spike of expired listing because those listings that people signed in January started expiring here. And then same thing happened here in December of 2021, December of 2020. You can see there's a huge spike right here. And what makes this month or the December of 2023 different is that we see this huge spike in supplies right here, and I think they will expire soon, and you will see a huge spike in terms of expired listing, which means that homes will be getting out of the marketplace, or they'll get on the market again at a more reasonable price. So that's why I think this is what really changed the seller's mindset about what market it really is. And now let's move on to a very, very interesting data set right here, which is the active listing versus the medium close price data chart. So you can see right here, super interesting stuff is during 2020 and 2022, we had a very historical low inventory. This is the super competitive market back in here in Austin back in 2021 and 2022. Where we had record low inventory, yet the home prices had record high closing rate. And it's no coincidence is that because we had low inventory and historical low interest rate, people were willing to bid up home prices because their monthly mortgage payment is still very affordable based on their income. So even at a close price that's way above average, way above typically what we see, because of the low inventory, we can see that people are willing to bid up their home prices, bid up all their offers in order to get into their home. But now you can see late in January, starting 2023, where interest rate has calmed down, or interest has gone up rather, you can see active listing has gone up because people saw, hey, these people sold their homes at record prices, so I can probably do the same. So they start listing their homes and the inventory picked up immediately. This is a very classic case of supply and demand. They had huge demand because all the influx from like California, all the influx from East Coast, New York, Boston, wherever, all moving to Austin. And then people wasn't ready with the supply. Then once people already moved here, they start shooting up the supply. Also, we have the new inventory homes here as well. And this is where I think we'll reach a market equilibrium. Because not sure if you know this, but the latest CPI report that came out just this past Tuesday here in November, it indicates that in the month of October, we had a 0% increase in inflation. So this is actually beating expectations, and this is a very, very good sign. And the Federal Reserve, even though they still sound very hawkish, meaning that they want to indicate, they keep saying they want to hike rates, but I think we're at the point where the rate hikes will stop. And once they meet again in a couple months, I think, so they will be very strong in their wording, but in their action, I think they will maintain a very dovish stance, which means that they will keep the rate the same because it hurts the market, it hurts the economy, and usually that doesn't show up until later. At the same time, the buyers now have more options. So even though there might be a stabilized interest rate indicating buyers will come into the market, but at the same time, we do have record high inventory. You can see inventory is basically at the level to way before pandemic, hitting around the 2017-ish, around 13,000 homes here currently sitting on the market. And at the same time, this is the chart that I will follow very, very closely because I think this is basically a test of the market, meaning that do we think Austin has enough of population, has enough of a market demand to meet all of the supply? If we don't, the home prices will drop. And for me, the next few months, I think this is where one of the key moments to really measure the demand of the market here in Austin. I think the home prices will stabilize around this area, around this price range, 430, 435, because we do have a lot of people moving here who moved here looking for their homes. Now that the mortgage rate, the interest rate has stabilized, fingers crossed, that we might see the buyers are more willing to put in offers for homes at this price range to gobble up the marketplace. And if it doesn't, obviously, then the prices will drop even more. So that's why for the next few months, it's important to keep track of this data set in particular. And I will be doing a market update to keep you informed about the Austin real estate market. So if you enjoy content like this, be sure to like, comment, subscribe to the channel. I really appreciate that. And if you're looking to buy a home here in Austin, be sure to reach out to me, call me, text me using the contact information in the description box. I really do want to help you get into your home here in Austin, Texas. Until then, I'll see you next time. Thanks again.